Good afternoon and welcome to NYFP. In midday trade on this Thursday, the major U.S. stock averages remain in the red, with the stock averages extending weakness. Joining me today is Sandra Navidi of BeyondGlobal. Sandra, thanks for joining me today.
Thank you, Remy.
Well, we got a slew of global economic data releases earlier today, and we saw that third quarter GDP in the overall Eurozone region, the flash reading, contracted. This does mark the second consecutive decline for the Eurozone in terms of GDP. But what do you make of the latest data, and what does this mean for your near-term outlook?
Well, the risks are to the downside. The ECB bond buying program has helped to stabilize a little bit and averted the danger of immediate defaults in Europe. But we see that the recession is spreading to the core and it's deepening in the periphery, so it looks quite serious.
And in terms of the PIIGS nations, we have been getting media reports about the possible progress of Greece as well as Spain. Now, given the uncertainty that's out there for the PIIGS nations, what do you expect to see in terms of Greece and Spain in the near term?
Well, Greece needs to restructure its debt soon, or the Troika needs to make a decision to finance the country. It's too deep in the hole. Spain is also facing problems. It's more a political problem because it's clear that it will need a rescue package. Rajoy has been hesitant to apply for one because it's coupled with conditionality, but eventually the market pressure will increase and the pressure from the Troika, and so probably sooner rather than later we will see an application for it.
And outside of the PIIGS nations, next week we will be getting PMI manufacturing figures out from the Eurozone. But in particular, with the case of Germany, what do you expect to see?
Well, the latest data for the third quarter we've seen from Germany have been quite good, better than expected. In the second quarter, we've seen a deceleration. The employment market is relatively stable. Demand consumption is stable. The inflation is also stable, so these are all good, but Germany doesn't operate in a vacuum. It's heavily export dependent, and that against the backdrop of a globally synchronized slowdown. So if the Eurozone goes more into a tailspin, Germany will inevitably affect it.
Well, Sandra, we'll be keeping a close eye on those numbers, but on this side of the Atlantic, headlines have all been permeated with the fiscal cliff. Now that deadline is fast approaching, so what do you expect to see?
Well, from what I'm hearing from Washington is signs that people will probably come to an agreement because the consequences for all would be too drastic. Nobody wants to take that risk, and I think American people have spoken through the elections that they're tired of polarization and that they want to see compromises and agreements. And so while we may not come to a full-blown agreement, at least I think a temporary one with further negotiations into next year.
Okay, Sandra, well, thank you so much for joining me on this Thursday afternoon, and thanks for all your insight today.
Thank you for having me, Remy.